Hello traders, my name is Tomasz Wiśniewski, I'm a chief analyst in operating research and analysis, and this is daily Analytical report. First, we need to start with the calendar. As always, obviously, this is our calendar, which you can always check on our website alpari.com, and I advise you to always check the calendar before trading. Because you need to know what is going to happen the day you are going to trade on the market. Like for example, today we have non-farm payrolls, and 3.5 hours non-farm payrolls, super important data. Was absolutely crucial for the past few years, but now lost a bit of relevance most recently. Past 2 years, let's say, we're focusing on inflation because non-farm payrolls was showing us what is the status of the recovery. Is job market rising or not? Now, after many years, after 2008, 10 years after the recession, we know that job market is perfect, in a perfect condition. Now we're looking for interest rate rises, and central banks move interest rates according to the inflation mostly. This is their data number one, so we're focusing mostly on inflation. But I bet that many traders still have sentiment for non-farm payrolls, and still it's like a kind of tradition, right? When first Friday of the month, it's non-farm payrolls day, and traders get excited. But most recently, like 3-4 years ago, we had huge volatility after non-farm payrolls. Now the volatility is much lower, and we have much higher volatility when there is a CPI data, for example. Overnight, we got retail sales from Australia, which came better than expectations, but it failed to help Australian dollar. Australian dollar is still weaker. We have this absolutely amazing bearish setup on the Aussie, Australian dollar to American dollar. And the price is continuing to go down, so even slightly better data than expectations, slightly, because it was 0.2 and we got 0.3, didn't help. Along with non-farm payrolls, what we're gonna have is unemployment rate, participation rate in and net change in unemployment, so actually kind of a non-farm payrolls for Canada, and that's how we'll end this week. Also, from the fundamental point of view, I need to tell you this situation on British pound, because early in the morning, European session, we got information, a rumor that Brexit divorce deal is very close. It came from European Union officials, which caused a spike on cable on British pound, but this is now denied, and the price is going lower. Anyway, I will explain you that in greater detail when we will look on the cable, but now let's check the calendar for the next week, because if you want to keep your position open over the weekend, you need to know what is going to happen Monday or Tuesday or Wednesday. So Monday is usually quiet. We have PMIs from China, industrial production from Germany, and those the most important events on Monday. On Tuesday, nothing really, not much is going to happen. Attractions will start on Wednesday, where we're gonna have manufacturing and industrial production from UK and GDP from UK, and also speeches from FOMC member Williams. And Thursday, ECB monetary policy meeting accounts, and along with the inflation from US. So this will be important day definitely for euro dollar, because we'll have data from Eurozone and from US. And on Friday we'll have trade data from China. and inflation from Germany, which is the biggest economy in Eurozone. So rather quiet week, not much is going to happen. Maybe we'll have more technical trading. Obviously, we will see. Now let's look at the platform, let's look at the charts, and let's try to find decent trading occasions from the technical point of view. Euro dollar is continuing to drop, and most recently we're having lower lows and lower highs after this initial drop at the end of September. The volatility is a bit lower, but the downtrend is still continued, and the most important thing is that we are below this orange line, because this orange line is important. It was a neckline of this head and shoulder formation. Then it was support here. We had a false breakout, but now we are back again below this line. And the fact that we are below this line creates a good selling opportunity. That is a really good selling opportunity, and the sell setup is still alive. Sell signal was triggered here, and I have this position open in my live trading account, so I'm extra happy with the outcome of this drop. But it was also very technical movement. Like, we broke the horizontal support, we broke the lower line of the technical pattern, we broke the mid-term uptrend line, long-term uptrend line, so many bearish factors in one place, so no surprise that the price going lower. Then we got a cable, and this is this reaction on this rumor about the deal, and before this, cable was in a very nice technical downtrend, so we got a breakout of the lower line of the channel up formation, which brought us a sell signal. Then we had a flag, then a breakout of the lower line of the flag, and a drop. Flag, breakout of the lower line of the flag, drop. Flag, breakout of the lower line of the flag, drop. Yesterday we do have a reversal. Here we do have the spike. What does it change? So flag is no longer here. Well, it was here, it's over, but this line is extended, and we do have what? A left shoulder head and a right shoulder, inverse head and shoulder formation. But you all know that the buy signal from the inverse head and shoulder formation will come only when the price will break the neckline. So as for now, it is a bit too early to claim the bullish victory. What is more, the upswing stopped on a horizontal resistance here. Resistance, support, resistance, and resistance again. So we do have a beautiful reversal pattern. Let me check if there is a Fibo here. Beautiful. So 38.2 is always an important Fibo. And here we do have a combination of important resistances. So 38.2, horizontal one, and the neckline. Inverse head and shoulder formation. Breakout of this resistance should give us a buy signal, but this rejection looks legitimate. And actually, look at this. On a daily chart, yesterday, bullish engulfing, which is a dangerous situation, but here we are very close to create a shooting star. And a shooting star will be a proper sell signal here, because if the reversal pattern will be present after the reversal pattern, it means that the shooting star will cancel this bullish engulfing, and this bullish engulfing will not be relevant. So this opens us a way, price going lower, and actually price closing below the orange line will be a good occasion to go short. On the other hand, just to wrap the situation up, the price closing above the 38.2 will be a great occasion to buy. I also have a short position here. I will protect my short position. It was open somewhere here. I will protect it by a stop profit order above those highs, because price getting there for me will be a clear signal that I need to escape from this. Now WTI oil, we are expecting this drop from here. This drop is happening. Why? Because we broke new old yearly highs and long-term highs here, this resistance. But after this upswing, we didn't test this as a support. There was 1, 2, second test finally expected, and now we stay above the support, which is a proper buy signal. And the thing is that even the price dropping below the orange area, that will not change the sentiment, because we are still above the uptrend line. We have another one. This green line is an important support. So the thing is that we do have positive sentiment still, and positive sentiment will be present as long as the price will stay above the green support here, green support here, and this long-term uptrend line. Now Australian dollar to American dollar, this is one of the best setups on the forex market recently. Just a short recap why. Downtrend, price respects the major downtrend line, double top formation, 1, 2, 1, 2, second test done with a shooting star here on H4 chart, second test done with a shooting star on a daily chart. Price creates a double top formation, breaks the horizontal support, after that the price breaks the lower line of the flag, and then we have a test of this previous support as resistance twice, and that is a proper sell, like a very very good one. I think like the best on the market right now and in the most recent history, like in the past few weeks. So I'm absolutely not surprised that the price went, that the price did go down almost without any stop, and even yearly lows, which are here, September lows, didn't stop it. 1, 2, 3, 4, 5 bearish days in a row. As you can see, sellers now are losing a bit of momentum, and the price is not reversing, but is not going any deeper. I think that the long-term support should be eventually reached, and that's in line with the weekly chart. Look, drop, flag, drop. The price should go there, most definitely. We should go 150 pips lower, but the thing is that I don't know if we'll go straight away or we will experience a correction first. Most recently, that's 2 bearish weeks in a row. We had 2 here, we had 3 here, 3 here, 2. So it is possible for the price to go lower. We had like 4 or 5 bearish weeks in a row here. So when we compare this drop we started here to this drop, this drop, this drop, this drop, this, or this is still nothing. So we may get this weekly candle and another one like that, aiming this horizontal support. My bet goes for that, for price reaching orange area. Now gold. Gold comes back to the pennant formation, to the sideways trend. Then there is this resistance, upper line of the formation. There is this horizontal resistance. There is this dynamic support. So we are in a sideways trend, right? That's rather boring. Gold had a chance to break this resistance most recently because we had a false breakout from this pennant. they could use this momentum, but they failed to break this resistance. Oh, stronger dollar is one of the reasons why they couldn't do this, because stronger dollar is negatively affecting gold. But well, we need to wait. There is no reason for you to like say that the gold will definitely go up or down right now, because there are no signals whatsoever that the price will go up or down. Actually, if we remove this line and extend this line here, and we will take into the consideration only, okay, let me do this, and we will take into the consideration only red lines. That will create a rectangle here, downswing rectangle, triangle. That should result in a downswing, or you can consider this as a pennant. So downswing, correction, downswing, correction, downswing. So the situation on gold is not optimistic, does not look optimistic at all. Now dollar index, upswing, correction, upswing, correction, upswing, correction, upswing. Not much to add here. There is a positive sentiment on the dollar index, and the price is climbing higher. American dollar to Canadian dollar, that is interesting. We are telling you about the short positions in the long term, but we said about the possibility of an upswing in the short term. And this is what is happening. So the price closed the weekly gap and came back above the horizontal resistance. And actually what the price is doing, I need to show you weekly chart, because on a weekly chart there is a drop, flag, and that should result with a further drop. But on a daily chart we have an upswing, correction, upswing, correction, upswing, correction, which is shaped like a flag. We bounced from the lower line of the flag, and we are aiming higher. In case that the price will break the upper line of the flag, this upper black line, that will be a trigger for the price to go long. Canadian dollar to Japanese yen, we have a head and shoulder pattern, left shoulder, head, and a right shoulder, which got declined, denied. Instead of that, the price breaks the resistance, the price makes new yearly highs and touches this resistance, and this is the place where we are going to have a correction. So that resistance was never tested as a support, and we anticipated that. This is the scenario that we drew 2 days ago. The price is about to test the horizontal support, the horizontal resistance as a support. So we are expecting a drop towards the green area, then a bounce and an upswing. Australian dollar to Swiss franc. I'm sorry. Here we saw an excellent selling opportunity most recently. That's a very clean setup. So a downswing, correction, downswing. The price broke the lower line of the wedge. And then the horizontal support, and then we tested that line as a resistance, and that test, which happened yesterday, gives us a proper sell signal. Now the price is struggling a little bit to go lower, but the thing is that as long as we stay below the green area, there is a sell signal, definite sell signal. Australian dollar to Japanese yen. Here the price is thinking about this inverse head and shoulder formation, but I'm not actually sure if it's going to happen. Left shoulder, head, and right shoulder. Maybe we'll have a bounce and a breakout of this line, and the price will go higher. But as for now, only the fact that we are kind of drawing right shoulder means nothing. So traders should not consider this as an inverse head and shoulder formation. I'm just telling you what can happen, but definitely it cannot be any factor for opening long position. No, for opening a position you need like hard data. You need to trade patterns which are already there, not which are just in the process of formation. Silver. Silver has a very interesting setup because most recently the price broke the downtrend line. Okay, fair enough. It can be an occasion to go long, especially that we broke the downtrend line, then we tested this downtrend line as a support and the price went higher, proving this support as a support. And in the same time, we had a horizontal support here and a dynamic one. So here the price on the 1st of October bounced from the combination of a horizontal support and a dynamic support, which actually should be perceived as a very good buy signal. So the price bounces from this level and goes higher. And now what the price created is a head and shoulder pattern. So we have a left shoulder here, head, and the right shoulder most recently. So this blue rectangle shows us a head and shoulder pattern, which I'm gonna remove now for the better visibility. And what happened is we had a neckline, the price broke the neckline yesterday, which should trigger us a sell signal. But the thing is that the proper and only sell signal will be triggered when the price will break the yellow area. As long as we stay above the yellow area, we still have a chance. Still have a chance to continue the upswing. But price closing below the yellow area, along with the gold closing below the red line, that will be both that will be a sell signal for both instruments. Silver should not go anywhere without the help of gold. So gold is the bigger brother and is a driver here. There are times when silver is stronger, there are times when gold is stronger, but silver will go nowhere without gold. Gold can go anywhere without silver, but silver has to listen. Bitcoin. The flag continues, no surprise here. Price is still below the upper line of the descending triangle pattern. And with this kind of setup, I see no other option than bounce from the blue line, break out of the lower pink line, and price testing the yellow horizontal support again. So this is the target here, $5,800, $5,900 for one Bitcoin. I can still see that coming. I do not change my opinion on the Bitcoin. I'm very patient. I know that the breakout cannot happen now or tomorrow, but the price, I identified that descending triangle long time ago, and I know that the price is continuing the bounce from the support, the bounce from the trend line. Every single bounce is smaller, and eventually the price should break the support, because the selling pressure will be so big and there will be lack of buyers that we will eventually get a breakout. American dollar to Japanese yen. Yesterday I was thinking about another correction equality. 1, 2, 3, 4, 5 corrections. I had a combination of correction equality, uptrend line, horizontal support, but it was the end. So the correction equality pattern ended. We can remove all those. Okay, corrections are removed. What is left? Left shoulder, head and right shoulder. What is left is that we broke this support, and after the breakout we used this as a resistance, which creates a significant selling opportunity here on this instrument. But before you go to the full bear mode, remember that you have a neckline, and if you want to play head and shoulder scenario, you need to see the breakout of the neckline first. And before going short, remember that you are above a major uptrend line, which favors buyers. Quality of the sell signal here is low. Quality of the sell signal here will be still low, but a bit better than here. Quality of the sell signal below the black line will be the highest quality, because that price being getting below the black line will mean a technical reversal pattern, will mean respect of the resistance, will mean a breakout of the lower line, breakout of the uptrend line, will mean a combination of lower lows and lower highs, so that will be legitimate. Now the quality of this sign of this signal is rather low. At least for me, I never buy in a downtrend or sell in an uptrend, never. And here is uptrend line, so we are still in an uptrend. Now S&P 500, which broke the support connecting recent higher low since end of June, broke the lower line of the rectangle, but the thing is that we are above two major supports, horizontal one and dynamic one. As long as we stay above the combination of those two, there is a buy signal, and most probably traders will use those levels to buy, because that's what they do in America. They buy. Once there is a reversal, sharp reversal, they buy. It happened many times, so don't even think about selling as long as we are above those two lines. The next one is, the last one is New Zealand dollar to Swiss franc. You know, it's a bit similar to Australian dollar to Swiss franc from this perspective here. But the sell setup here is very good, as well as on Australian dollar to Swiss franc, but most recently better is here. So we bounced from the horizontal resistance, we had a false breakout above the downtrend line, we had a wedge here. We bounced from the downtrend line, we had the breakout of the wedge, breakout of the horizontal support, so all supports are gone. And there is one support left here, and this support is actually a target. So if you're saying here, stop loss should be here, 35 pips, and take profit should be somewhere here. Almost profit is 3 times bigger than the loss, which makes a good risk to reward ratio. So guys, this is it. Let me quickly recap the situation on the major pairs. So the best setup, Australian dollar to American dollar, maybe we'll have a correction, but overall long-term sentiment is negative. Cable, still negative as long as we stay below those, and euro dollar, negative, definitely. Thanks very much for watching the daily analytical report. I hope you enjoyed that and you like those setups. And now we'll have a short break, and after that another educational webinar about the candles and price patterns. So thanks very much. In the meantime, visit our Twitter account and our website, allpire.news.